Hi. In this video, I'll show you what happened to metals, why they dropped, whether a reversal has occurred, and most importantly, how to profit from this in February 2026. Friends, what you see on the chart is actually my previous forecast. This was a video from January 19th, 2026, where I talked about the need for a correction and the importance of preparing for it. At that time, we discussed that wave 3 was forming. A fourth wave should follow. It might take a month, 2, or even 3. And in fact, we would enter the final fifth wave in 2026. I remember there were comments saying that all of this was nonsense, that I wasn't letting people make money, was panicking too much, making everyone sell, and so on and so forth. Friends, it's been less than a month. I appeal to those commenters who wrote before, where are you now? And how are you doing? I'm ready to sympathize with you. Let's get back to the chart. Here you see gold, where I set the target for the final move at 5,368. And in fact, our third wave should have ended somewhere around 5,100 to 5,150. Pay attention to the lever at the bottom, which in fact was telling us about this. Now take a look at silver. Our main target was the 115 to 120 level within the third wave, and in fact, within this move, we were completing the cycle. At that moment, we didn't have a lever yet. And accordingly, once the market correction was supposed to fully form, we planned to re-enter our positions. Now let's transition our focus and move on directly to the charts on TradingView. And I suggest you take a look at what has happened so far, that is how the current situation looks from the perspective of the markup. First, gold. In gold, wave 3 has been completed. There is no doubt about that. It's very easy to check. We draw a trend line between 2 and 4. A breakout of this line indicates the end of the cycle. That's the first point. Even a false breakout here is considered the end of the cycle. Accordingly, we have the maximum value on the MACD indicator. And this indicates that the trend is not over yet. We need to reach the 0 point, and in doing so, wave 4 will be formed. After reaching the 0 point, we move into a direct divergence and update our highs. And essentially, that's where the cycle ends. So here, friends, we can already roughly outline the targets for the final movement that we are likely to see in 2026, or at least within this cycle before a large-scale significant correction. And here, accordingly, our targets are 5,780 and 6,370. I want to draw your attention to the fact that a prolonged correction can be offset by a deeper one, right? That is, at the current moment, we might see a faster correction, not 2 or 3 months, but a shorter one. This is primarily related to alternation. Initially, I was focusing on timing due to the similarity of our corrections. So we should have waited at least about the same amount of time, that is, about 2 months. But the depth of the current correction, which reached 38% in gold, makes one wonder whether wave 4 may have already formed here. We will return to this question a bit later, but for now, keep this in mind. So according to our scenarios, we are definitely moving on to update the highs. It's possible that there will be another decline toward the local minimum of 4,500 in order to complete the correction or to form some other structure, such as a triangle. And now we move on to silver. Silver has a similar story for us. Here, I want to draw your attention to the skewed Andrews pitchforks, which indicate a somewhat deeper correction around 62% and a similar potential. So the potential here suggests that we could form a three-wave structure and then in fact move on to update the high. If we plot our Fibonacci grid here, the approximate targets for the final growth will be higher than in the previous forecast. That's 128.76 and 156.60. So this is the kind of fifth wave we will see formed here. The key question we are facing now is whether the fourth wave has ended, whether it's time to start building a position, and if not, at what point should we do it? Let's look at gold. Gold is currently the key asset, so to speak, that I'm paying attention to and monitoring. And the first thing to pay attention to is the three-wave structure. Looking closely at the chart, we can see that a three-wave structure has formed here, which could actually signify the definitive conclusion of the entire correction phase. But if we examine the price action of silver from the same IC source, in this specific case, we can also further validate and confirm the downward movement as a clear three-wave move. In other words, the correction as a whole may be completely finished. Let's go back to gold. On the way, we have two key volume levels, the current zone at 5,100 and the zone at 5,300. In simple terms, if we break through 5,300 or consolidate here, then in this case, we no longer expect the correction to continue. We would actually be heading for a new high. So you can go ahead and mark this line right away. At any moment from the current zone of 5,100 or from the 5,300 zone, we could form another corrective move. What does this mean? Our correction itself could take the form of a three-wave structure. And at the moment, if we compare the two upward moves, the latest one is exactly 62% or a shortened wave C. Thus, due to factors like divergence and decreasing volumes, it is highly likely that we will see a correction soon, which will be very much to our advantage. The formation of a local correction here will allow us to consider a move to break through this triple top towards the next zone at 5,300. And this is the first trading opportunity that can be implemented in both gold and silver, or if you prefer, you can look for something similar in palladium. They are not included in this episode, but nevertheless the logic and price behavior there are also similar. Accordingly, when exiting our pitchforks, the third point is at approximately the 4,900 level. When we exit, we are saying that the price will return to previous values. That is, it will form the next downward C leg. In this case, we mark the 61 level as the target. That is, we are saying that in the case of a breakout at 4,907, we will first see a decline to 4,350, and only after that will an upward trend form. Thus, as long as we remain within our ranges, that is, within our volume levels, we have the opportunity to continue growing without any significant correction. And then we consider that the depth of this decline, which occurred at the end of January, is in fact the entire correction. Thus, friends, we will remain in long positions throughout the month of February. Some trades are either already placed or we are currently trading them, that is, open positions. And for now, I am working step by step towards the next level. There, in case of consolidation or if signals for trend continuation form, I will either hold my positions or reopen them and trade for new highs. Keep in mind the possibility of another decline, which means there could be an opportunity to buy at a very, very attractive price. And just in case, I'll mention this at the end. We're only talking about the equivalent in US dollars, gold, and silver. This does not apply to any other quotes. In other words, each asset paired with another currency needs to be considered separately, and it will have a completely different chart. That's all from me. This was Dimitri, and in fact, if you need more information, look for the link to my Telegram channel below this video, where updates are posted every day and you'll have more information and trading ideas so you can earn money. That's all from me. Goodbye, everyone.